In the world of finance, few names command as much respect and intrigue as Ray Dalio. He is the visionary founder of Bridgewater Associates, a firm that didn't just participate in markets but fundamentally reshaped them. Dalio built an investment empire, transforming a small operation into the largest hedge fund on the planet. Yet, his story isn't just about accumulating wealth, it's a profound testament to the power of transformation, illustrating how profound failure can become the very catalyst for unparalleled success, forging enduring wisdom. Dalio's fascination with markets began early, sparked by a part-time job as a golf caddy where he overheard conversations about stock tips. By age 12, he was already investing, demonstrating an innate curiosity and a keen analytical mind that would define his career. This early drive, combined with a voracious appetite for understanding economic cycles, laid the groundwork for a future where he wouldn't just follow trends but seek to codify the very forces driving them, always looking ahead for patterns. After honing his skills on Wall Street, Dalio established Bridgewater Associates from his two-bedroom apartment in New York City in 1975. Initially, it was a modest venture, providing consulting services to corporate clients and managing a small pool of institutional money. He envisioned a firm that could navigate the unpredictable tides of the global economy with clarity and foresight, aiming to build a place where rational thought would consistently triumph over impulsive emotion, charting a new course in finance. Through the late 1970s and early 1980s, Dalio's reputation as a prescient analyst grew. He accurately predicted several major market shifts, bolstering his confidence and that of his fledgling firm. This period of success forged a belief in his own predictive abilities, a conviction shared by his clients. It felt like an unstoppable ascent, where insights were sharp, and the future seemed clearly within grasp, leading to a profound trust in his own judgment and foresight. Then came 1982, a pivotal year that would define Dalio's trajectory more than any other. Convinced that the U.S. economy was heading for a deep depression, he publicly made a bold, contrarian prediction: a stock market crash was imminent. He stood firm, even testifying before Congress, articulating his detailed analysis. It was a moment of immense conviction, a bet against the prevailing optimism, rooted in what he believed was an unshakable understanding of the economic machinery. The market, however, defied Dalio's prediction. Instead of crashing, it embarked on one of the most significant bull runs in history. His clients lost faith, and his firm lost money. The very confidence that had propelled him to prominence now became his undoing, leading to immense personal and professional consequences. This catastrophic misjudgment was not merely a financial setback, it was a profound blow to his professional identity and an existential threat to his burgeoning firm. The aftermath was brutal. Bridgewater Associates teetered on the brink of collapse. Dalio had bet so heavily on his conviction that he dismissed dissent, leading to a mass exodus of employees and a dramatic loss of capital. He was forced to borrow money from his father to stay afloat. This period wasn't just about financial loss, it was about grappling with utter failure, the crushing weight of responsibility, and the profound personal humiliation of being wrong, pushing him to rock bottom. With only one employee remaining, Dalio faced a profound choice: abandon his dream or radically rethink his entire approach. He could have retreated, found a less demanding path, but the sting of failure ignited a different resolve. This wasn't about stubbornness, but a deep-seated desire to understand why he had failed and how to prevent such a mistake from ever happening again. He recognized this moment as an opportunity to build something stronger, founded on new principles. His reflection led to a stark realization: his ego had blinded him. He had been so certain of his own insights that he'd failed to critically examine his assumptions or genuinely consider opposing viewpoints. This wasn't just about market analysis, it was about human fallibility. Dalio understood that for true success, he needed a system that minimized the impact of individual biases and emotions, creating an objective framework for decision-making that transcended personal conviction. This painful experience catalyzed the development of what would become Dalio's principles, a foundational philosophy centered on radical truth and radical transparency. He committed to confronting reality directly, no matter how uncomfortable, and to fostering an environment where every idea was challenged and debated. It was a conscious effort to build a culture of open inquiry, where mistakes were not just tolerated but actively sought out as invaluable learning opportunities, paving the way forward. Radical transparency at Bridgewater meant open-door discussions, recorded meetings, and candid feedback systems like the Dot Collector app. Employees were encouraged to voice disagreements directly, with the understanding that honest criticism was a gift, not an attack. This culture demanded immense humility and a dedication to collective improvement, creating an ecosystem where every decision was stress-tested by a diverse range of perspectives, constantly refining understanding and action. Beyond cultural transparency, Dalio became a pioneer in systematizing investment decisions. He believed that human emotions were too unreliable, so he began translating his investment principles into algorithms. This meant codifying every decision rule, every pattern, and every economic variable into a data-driven system that could execute trades dispassionately and consistently. It was a groundbreaking shift, moving from intuition to cold, hard, verifiable data as the ultimate arbiter of truth. Bridgewater cultivated an idea meritocracy, where the best ideas won, regardless of who proposed them. This meant challenging assumptions, even those from Dalio himself. Every individual was expected to think independently and voice their well-reasoned perspectives, fostering an environment of intense intellectual rigor. It was about creating a system where collective intelligence could consistently outperform individual brilliance, driving innovative solutions through collaborative scrutiny. Through these radical principles, radical transparency, data-driven algorithms, and an idea meritocracy, Bridgewater Associates transformed. It became a unique machine designed for continuous learning and adaptation, minimizing human error and maximizing objective decision-making. This wasn't just a hedge fund, it was an organizational experiment proving that systematic thought, when rigorously applied, could yield extraordinary results. The lessons from failure were now encoded into the very DNA of the company. This new systematic approach allowed Bridgewater to navigate subsequent market crises with unprecedented resilience. While others faltered during downturns like the dot-com bubble burst or the 2008 financial crisis, Bridgewater's diversified strategies and algorithmic foresight often protected and even grew client assets. The painful lessons of 1982 had forged an anti-fragile organization, one that not only withstood shocks but grew stronger from them, demonstrating the power of systemic resilience. The results were undeniable. Bridgewater Associates grew from a near-bankrupt firm to become the world's largest hedge fund, managing hundreds of billions in assets. Dalio's principles, born from the crucible of failure, weren't just theoretical, they delivered tangible, consistent performance over decades. This remarkable ascent solidified his reputation not merely as a wealthy investor, but as a groundbreaking thinker whose methods transformed an entire industry, leaving an indelible mark on finance. Ray Dalio's story is a powerful narrative of redemption and relentless improvement. He transformed his biggest mistake into his greatest lesson, turning personal failure into a systematic advantage. His principles have resonated far beyond finance, influencing leaders and thinkers across industries. He proved that setbacks are not endpoints but essential data points, invaluable feedback mechanisms guiding us toward more effective strategies and more profound understandings, fostering growth. For us, Dalio's journey offers a vital blueprint. It reminds us that embracing radical transparency, with ourselves and others, can unlock unparalleled growth. It champions the relentless pursuit of data and objective truth over biased intuition. Most importantly, it shows that true resilience isn't about avoiding failure, but about leveraging it, learning from it, and building robust systems that allow us to not only recover but to soar to even greater heights, realizing our fullest potential.